Yes, there is no booster which is coming in from market. In fact, even if you remember during when GDP numbers came, Q1 GDP at 7.8%, but did market celebrate? No. So yes, there is more to market for our discussion, and we have with us Vinay Rajani, CMT Senior Technical and Derivative Analyst, HDFC Securities. Mr. Rajani, welcome to ET Now. My first question to you is, will we once again close in red today after a comfortable kind of a green opening?
Yeah, choppiness is still there. 350 points of correction after the positive announcement of GST. So market is not cheering as we have been discussing. Every higher level is being sold on, and FIs are carrying their short position in index future. They have almost more than 92% of their index future position are on the short side. So definitely somehow there is a concern, sentiments are not that positive. However, some stocks and sectors are still performing and making and registering new 52-week highs like auto and auto ancillaries. So there is no across the board selling in the market. There has been selling in Nifty in last two trading session, but still we can say that the overall trend has been choppy. There is a range of 24,500 to 25,000. So waiting for the Nifty to break out on the either side, and then we will get a momentum. But definitely bias is on the positive side. I think buy on rumor, sell on news kind of phenomenon have we already seen since yesterday. But I think at lower level again we could see buying coming and demand emerge from the support level. So 24,500 to 550 is a very strong base for the Nifty, and we believe that Nifty should found support around that and bounce back. So stock specific and sector specific bullishness is there. There is no momentum, and momentum will come once we see a Nifty closing above the 50 days EMA, which is around 24,800. On intraday basis, 25,000 is the resistance. So this is the conditional level for the Nifties. But yes, we need to find out outperformer sector and stocks to trade in this kind of choppy market.
May stay, but at the same time, the undertone of the market is still bullish as per the experts. Vinay, hi, good afternoon. Initially, we used to say that it's a tricky market, but now the market looks twisted. I mean, yes, the global jitters are many, but then we have domestic triggers which should help, the economic indicative actions which should help. The markets are not as witnessing the cheer as they should. Yes, you're right when you say it's a stock pickers market, and we need to understand which are the pockets which will give us good returns. So having said so, what are the trading ideas which you are focusing on at present?
So basically, in this kind of market, after the announcement, which is positive for the sector, auto ancillaries have been doing quite well. So out of this auto ancillary space, I like Sensera Engineering, which has given a fresh breakout on the chart. So we have already seen outperformance from the many auto ancillary stocks in last 3-4 trading session. But Sensera Engineering, which has been a good quality stocks from this particular space, is now looking technically strong also on the chart. So 1360, 136064 should be the entry level for the traders. 1300 should be the stop loss. On the upside, we are expecting a target of 1471. The second pick also I would like to take from the same space, the auto ancillary, that is Endurance. So Endurance is looking quite strong. There has been a cup and handle kind of breakout on the weekly charts, and the recent price move has been quite resilient in the falling markets. So Endurance tech around 2990, can go long. I would suggest a stop loss at 2930. On the upside, I'm expecting a target of 3100. So the time frame for both the recommendation would remain for 2 to 4 trading sessions.
All right, these are the recommendations which are coming from Mr. Rajani. Thank you so much for joining with your views.